entering. RISCO Insurance, for those guests, is a insurance brokerage in Southern California. And one of the things that we pride ourselves is having a long-standing partnership with our clients, and we want to partner with them during this difficult time. So we've had many different programs to offer a little bit about our menu of value-added services, business insurance, personal insurance, life and health, and employee benefits. We also offer loss control, risk management, education and training. We also have a component in that risk management now with this COVID-19 for anybody that's interested in reopening and need consultative services. We have some wonderful advisor, Cal OSHA specialists that are helping businesses reopen. That's become just very valuable. The other thing that you have access to, and this is free for all, we have a YouTube channel. Go to that. And in that YouTube channel, we've covered a lot of very interesting topics with COVID. The reopening, that was the most latest, how COVID affects insurance, preparing your business to reopen, human resources and guide during the COVID-19, and how to just keep your workplace protected from the coronavirus. So once again, we're here to partner with you. We are very happy to have our guests and that are going to lead us through this kind of, I guess, gauntlet of changes. Let's go to the next. Yeah, this is our contact. So if anybody wants to contact us, here's our contact information. Feel free to contact us at any time. We do want to put a disclaimer on here that the information, is subject to change. As we said, it's very fluid, and we're not offering personalized advice, but we are looking forward to providing a guideline, especially with our focus today is on the Paycheck protection program and what the government right now, what Congress has placed out there in terms of debt forgiveness. I want to go to, should we move over to our guest? I want to introduce our guest. We're very happy to partner with Vasquez and Company. They've been long-term friends of ours. We're clients of both each other. We are very happy to have them on board. I'm going to get Cristy. I'm going to unmute Cristy. Cristy, let's see. Give us a second. We'll unmute Cristy.
Okay.
So, how you doing, Cristy?
I'm good. Thank you, Javier, for the introduction. Can you hear me?
Yes, I can. Let me formally introduce you. Cristy Canieda. She is a audit partner for Vasquez and Company, and very, just a really neat person. I got to know her just a few phone calls and very knowledgeable. And Cristy, thank you for coming on board with this. Also, Lynn Boster. Lynn, I want to unmute you. How are you doing, Lynn?
Hi, I'm doing great. Thank you, Javier.
Yeah, Lynn is a tax preparation partner, tax partner, I'm sorry, for Vasquez and Company. And to both of you, thank you for participating and being our speakers. We look forward to learning. I've got my pen, I got my pad ready to try to understand all the nuances and the ever-changing world of this Paycheck protection program. So with that, Cristy, let me hand the baton over, but thank you again for sharing this information with our clients and with our guests.
Thank you, Javier. Good afternoon, everyone. Again, I would like to mention before I proceed with my presentation, I would like to mention that, as Javier has mentioned, the regulation is still changing. There might be changes that you need to watch out for. What we will be presenting today are information based on the existing guidelines, and at the same time, the recent updates brought about by the Paycheck Protection Program Flexibility Act that was issued on June 5, 2020. So with the, here you go. So here's the agenda. It's a very quick agenda that we will discuss in the next 30 minutes. And then after my discussion, we will give everyone a chance to ask for questions. So we allotted probably around 20 or 15, 20 minutes on the Q&A section of the presentation. So I will be discussing the SBA program. My assumption is that some of the participants in this call right now either already applied or gotten the loan, or are interested in applying for the program and plans to apply before the deadline. So with that, we will include in our discussion the Paycheck Protection Flexibility Act and the guidance and requirements for loan forgiveness. We will also cover in our discussion the PPP loan forgiveness documentation that you will have to provide, especially when you are applying for loan forgiveness. So let's first provide a few more information on the PPP funding. The initial $349 billion of funding ran out on April 16th. That's actually just a day or two after the issuance of the final guidelines in April. And then additional $310 billion was approved on April 21st, and that is to replenish the initial $349 billion. As of today, or as of last week, there are still approximately $100 billion available PPP funding still untapped by small businesses. They are still accepting applications, and applications are slowing down, but you have until June 30, 2020 to apply for the loan. The guidance as of today is not clear, but there were revisions issued to the IFR. The Paycheck Protection Flexibility Act was signed on June the 5th, 2020, and guidelines are still changing, as I've mentioned. However, the good thing is that they have already issued the updated application form for the loan, and the application for the loan forgiveness updated based on the new requirements from the Paycheck Protection Flexibility Act. The Paycheck Protection Flexibility Act was signed. Actually, the objective was to expand the covered period and provide the borrowers more time to comply with the requirements, especially the requirements for forgiveness. If you plan to apply for the loan, I would like to first go over the basic requirements. And again, these are actually indicated in the application form. But I would just like to go through with you this very quickly, what is on the slide. It is contained in Section B of the loan application form. So you are eligible to apply for the PPP if you have 500 employees or fewer. Also, you're eligible if you meet the applicable employee size standards for their North American Industry Classification System. 500 employees or fewer by location for those accommodation in the accommodation and food service industry as defined, or for any business acting as a franchise that is assigned a franchise identifier code by the SBA that actually includes hotels, bars, and restaurants. You are also eligible if you are a sole proprietor, independent contractors, and other self-employed individuals, including gig economy workers. Charitable tax-exempt organizations under Section 501c3 of the IRC and veterans organizations described in Section 501c19 are also eligible to apply for PPP loan. Tribal business organizations under Section 31B2C of the SBA are also eligible to apply. if you are planning to apply for the loan or in the process of applying for the loan, we recommend that you actually go through these items in the process of documenting your application. So you will have to revisit if you have other potential sources of liquidity, if you have the ability or don't have the ability to access other capital. You have to also look at your cash flow projections and sustainability of operations with or without PPP financing. If you don't have any of this, then you are eligible to apply for these loans. And these items are actually somehow included in the certification that we will have to sign as part of the application process. I would like to mention again that the loan application form was revised. The latest version should be the June 12, 2020 version. So if you are planning to apply, just make sure that you use the latest version of the loan application form. Now, before I go to the discussion of loan forgiveness, let me first discuss the Paycheck Protection Flexibility Act, which was signed into law on June 5, 2020. Yes. The passing of Paycheck Protection Program Flexibility Act was necessary because businesses have not been able to spend PPP funds on payroll while the business is closed, and closures have been broadly required by state and local orders in light of the COVID-19 pandemic. So to address this issue, Congress passed the PPP FA or the Paycheck Protection Flexibility Act that extends the PPP program covered period until December 31st, 2020, and gives employers 24 weeks rather than the original 8 weeks from the origination date of the PPP loan to address the requirements. So rather than 8 weeks, you have 24 weeks to spend the PPP proceeds. However, they issued a congressional letter to add to record to clarify that no new PPP loans may be originated after June 30th, 2020. So that extends the deadline for you to be able to apply for the loan by the end of June 2020. I'm sorry, I actually, there you go. Okay, but the new law also allows the borrowers with pre-existing loans outstanding as of June 5th, 2020. So those who availed of the loan some in April and May and have the loans outstanding as of June 5th, 2020, you still have the option to use the 8-week covered period from loan disbursement. That is, if you were able to spend the loan proceeds on allowable expenses within the original 8-week covered period. The PPP, the original PPP also provided wage and employment level safe harbors. This permitted employers to avoid a reduction in forgiveness amounts due to a significant decrease in employment and wage levels between February 15 and April 16, 2020. So that's the period where a significant decrease in employment happened, as long as the number of employees and wage levels are restored by June 30th, 2020. Now, the PPPFA extends this safe harbor restoration deadline from June 30 to December 31st, 2020. So you now have until June 31st, 2020 to be able to restore the same level of FTE that you have and the wage level that you have before February 15. So this change allows the borrowers to gradually reopen over time and have enough time to rehire the employees that were displaced during the pandemic period. Borrowers with, okay, so that's the safe harbor extension. So the legislation includes 2 new exceptions allowing borrowers to achieve full PPP loan forgiveness if they don't fully restore their workforce. The PPPFA also clarifies that loan forgiveness will not be reduced based on an inability to rehire employees if the employer can document first that the written offers made to rehire individuals who were employees of the organization on February 15, 2020, or if you can document the inability to hire similarly qualified employees for unfilled positions by December 31st, 2020. Additionally, forgiveness will not be reduced for failure to maintain employment levels if the organization is able to document an inability to return to the same level of business activity as existed prior to February 15, 2020, due to compliance with COVID-19 related guidance for, say, sanitation, social distancing, or worker or safety requirements from Secretary of HHS or Health and Human Services, the Centers for Disease Control Prevention, CDC, or the Occupational Safety and Health Administration between March 1st and December 31st, 2020. Again, these guidelines, it should be noted that these guidelines came from federal agencies. So if you are not able to reopen because of the guidelines coming from these federal agencies, and you can document your inability to reopen during that period, you can also, your forgiveness will also not be reduced by your failure to maintain employment levels. The Act also reduces the percentage of loan proceeds that must be spent on payroll costs. So from 75%, it was reduced to 60%. That actually enables businesses to spend more on overhead and fixed expenses such as rent or utilities, and or allocate the expenditure only up to 60%. Also, borrowers now have 5 years to repay the loan instead of 2, just in case that there is a portion of your loan that were not forgiven. You now have 5 years to repay it instead of 2 years from the original provisions of the PPP. The interest rate, however, remains at 1%. The Flexibility Act also allows employers that receive PPP loan forgiveness to continue deferring the payment of the employer's share of the Social Security tax under CARES Act. So that's the FICA payroll taxes for 2 years. So you can now defer it, and half of the payroll taxes will be due in 2021 with the rest of the amount due in 2022. The original PPP guidelines actually prohibited employers from deferring those employer Social Security taxes after any portion of PPP loan was forgiven. So now the new Flexibility Act now allows deferral of the payments of those payroll taxes. The SBA, in consultation with Treasury, issued a modified borrower application form, as I've mentioned, and also the modified loan forgiveness application implementing the amendments to the PPP made in the new law are now included in the revised loan forgiveness application form. There will be further changes that are forthcoming. And we should watch out for those. The actual calculation of the forgivable amount did not change based on the formula. However, there may be still changes in terms of interpretation of different items in the new law. So again, the revised application for forgiveness, that's the version that's dated June 16, 2020 is now available. You can access that in the SBA website. Just make sure that you use the revised and the latest version of the forms. There is also the easy version of the forgiveness application, or the form 3508EZ, that applies to borrowers that are self-employed and have no employees, or employers that did not reduce the salaries or wages of their employees by more than 25% and did not reduce the number of hours of their employees. Or they are applicable also to employers that experience reductions in business activity as a result of health directives related to COVID-19, but did not reduce the salaries or wages of their employees by more than 25%. So if you fall under those category, you can use the easy version of the forgiveness application. These requirements, however, should be supported by any records or reports. You need to prove that you did not reduce the salaries or wages of your employees, or that you actually maintain the same level of employees that you have before February 15, 2020. It is still expected that Q&As will still be released. There are still questions regarding the revised loan application and the revised loan forgiveness application forms that they don't have answer to. So we still expect additional guidelines and Q&As to be issued by SBA in consultation with the Department of the Treasury. Now let's go to loan forgiveness section of the discussion. So everyone's hope is to have a full forgiveness, and that's actually the congressional intent. However, you can achieve full forgiveness only if you use all of the loan proceeds for forgivable purposes, and employee and compensation levels are maintained. And I will discuss this in the following slides. We have changes under the Paycheck Protection Flexibility Act that impacted the calculation and the limit in terms of how much compensation you can actually allow for forgiveness. The loan amount was 2.5 times the average monthly payroll. And of course, that should include benefits, retirement payments, unemployment insurance, and other costs that would fall under payroll costs. That same support that you have provided when you applied for the loan will be the same support or similar support that you will provide when you apply for loan forgiveness. So loan forgiveness are primarily payroll driven, as you use your payroll cost to apply for the loan. And loan forgiveness allowable expenses includes occupancy and utility costs as well. So for purposes of loan forgiveness, these are the qualifying payroll costs. There are a lot of changes that actually were included in different IFRs that were issued, and we anticipate to still get additional changes on this. So the qualifying payroll costs include or consist of gross compensation, which is limited to 100,000 per employee, and this is the cap per employee in terms of compensation. If there is an amount in the IFR that is included that limits or caps the employee that you can only include in your application for forgiveness, depending on what covered period you will use. Remember, you still have the option to use the 8-week period if you availed of the loan before June 5th. So you still have, can use the 8-week period or the 24 extended period, covered period that you can use. For a 20-week period, the cap per employee is, compensation is 46,154. Actually, they calculated it based on the number of weeks. So that's 24-week period that is limited to 100,000 on an annual basis. Or 15,385 for an 8-week period. That is if you decide to use the 8-week as your covered period for purposes of applying for loan forgiveness. That also includes employee benefits, employer paid amounts such as health insurance, premiums, 401k, employer share, and state and local taxes assessed on the employee side. I think there are certain, or there is a clarification with respect to this. The initial guidelines mentioned that it is for employer side. Is that right, Lynn? I think the state and local taxes should be, well, the payroll cost should be at gross amount.
Yeah, that's right. They came out with further clarification on that just recently, and that you just take the gross amount.
Right. Mm-hmm.
There's no reduction or addition.
Correct.
Gross, yeah.
Okay.
Mm-hmm.
Thank you, Lynn.
Sure.
And other allowable uses also include mortgage interest payment. Remember, for your mortgage payment, only the interest can be considered allowable uses. Business rent payments is also allowable, and utility payments. For all of those items, however, it is required that agreement must have been in place prior to February 15, 2020. So all those, your mortgage agreement, your lease agreement, and your utility should have been in place or existing prior to February 15, 2020. For calculating the forgivable amount, the calculation actually did not change with the release of the new law. It is the same amount. What changed is the factors or the components and the information that's included in the calculation. So before you are able to calculate for the loan forgiveness amount, you first have to come up with the baseline forgiveness amount. And the baseline forgiveness amount are the items that I mentioned in the previous slide. So in here, so all the amounts that you spent on payroll over, on payroll costs and other allowable uses over either the 8-week period or the 24-month period, 24-week period, those are the baseline forgiveness amount. You multiply it by the full-time equivalent haircut ratio that gives you the preliminary forgiveness amount. Now, your loan forgiveness amount should be equivalent to the amount that you've taken from letter A above in the slide, which is the preliminary forgiveness amount. It will be reduced by the 25% pay reduction haircut. So that will give you the loan forgiveness amount. So in the previous slide, we mentioned the FTE haircut ratio and the 25% pay reduction haircut. So that's item number 1. The full-time equivalent haircut ratio determines if the borrower maintained the same level of full-time equivalent employees during the covered period. So the idea is that the level of employees that you have before February 15, 2020, you should be able to maintain that same level of employee during the covered period in order for you to achieve full forgiveness. Test number 2 is the 25% pay cut reduction haircut or pay reduction haircut. It determines if the borrower did not reduce wages or salaries more than 25% for any 100,000 or less than 100,000 paid employees of the employer. So if the borrower reduced the salaries of the employee by more than 25%, the forgiveness amount or the forgivable amount will be reduced by the amount of salary reduction in excess of the 25% reduction. So this is the formula for the full-time equivalent haircut ratio. It's the average number of FTEs during the covered period as compared to the average number of FTEs during the lowest of the periods indicated below, which is the during a year before February 15, 2020, which is February 15, 2019, or the period from January 1, 2020 to February 29, 2020 employees. And there is an exception for seasonal employees as well. So your numerator is the average FTEs during the covered period, and your denominator is the FTEs for one of those two periods, whichever is lower. So for instance, if you have 50 employees, or if you have, say, 60 employees on February 15, 2019, and 55 employees for the period January 1, 2020 to February 29, 2020, you will use 55 employees as your denominator. Now, if you have 50 employees during the covered period, either during the 8-week period that you opted to or the 24-week period that you opted to, if you have 50 employees during that time, and as compared to 55 employees that you have from January 1, 2020 to February 29, 2020, that means your FTE haircut ratio is 91%, which is the 55 employees or the 50 employees over the 55 employees that you have from January 1, 2020 to February 29, 2020. So what that means is only 91% of your total forgivable amount or total qualified expenses, preliminary baseline forgiveness amount can be forgiven with the FTE haircut ratio of 91%. Now for salary wage reduction or the 25% pay reduction haircut, this is the amount by which compensation reductions exceed 25% in comparative periods. So I actually would like to give you an example how this can be calculated by presenting some information here. So for instance, if an employee makes $13,000 prior to COVID-19 and he makes $8,000 during the covered period, we compare the $13,000 that the employee makes before with the $8,000 for post-loan period or the covered period. So that's 13,000 minus 8,000. So that means that the employee had a pay reduction of 5,000. 25% of the original salary of 13,000 is 3,250. So that means that the 5,000 pay reduction exceeds the 25% of the original salary that the employees was making. So the 5,000 reduction exceeds 3,250 by 1,750. And therefore, your forgiveness amount will be reduced by 1,750. So that's how the 25% pay reduction haircut will impact the amount of forgiveness or the amount of loan forgiveness that will be applied to you if you have reduced your employee salaries by more than 25%. So this, again, this is just an illustration to show how the 25% pay cut reduction haircut will impact your forgiveness amount. So when in the process of applying for loan forgiveness, you will have to attest to a lot of items that actually include stating that you comply with all the requirements for, the loan to be forgiven. Well, you are able to attest to the bank as to the accuracy of the amounts claimed for forgiveness. You still have to make sure that you have all the documentation and the reports that are necessary in order for you to support all those certifications that you signed when you submitted your application for loan forgiveness. For instance, if say you have to have all the supports that you need for payroll. So you should be able to maintain in your accounting records a documentation verifying the number of full-time equivalent employees on payroll to support your attestation that saying that you are able to maintain the same level of employees from the period prior to COVID-19 during the end up to the covered period. So how do you support the number of full-time equivalent employees or the fact that you are able to maintain the same level of salaries that you have for your employees? You should be ready to produce your payroll tax filing. For instance, your 941s reported to the IRS, all the filings of income taxes as well, and payroll and unemployment insurance filings to the state. You should be able to have those ready for you so that in case SBA requests for the supports for all the information that you have provided in your application for loan forgiveness, you have those supports ready. For other expenses that you claimed, for instance, the lease obligation or the rent payments or the utility payments, the mortgage interest payments, you should have your canceled checks, either payment receipts or invoices for your lease, transcripts of accounts verifying payments of those expenses during the covered period. So just make sure you have all those information ready and documents ready for you to support your application for forgiveness. Do you have any question at this point? I think this is probably my last slide, or the next one is my last slide, but I believe we can accommodate questions. Let me finish the last slide first. I mentioned earlier that there may be still some unclarified items or issues, so we anticipate to still have Q&As and interpretations being released in the next few weeks. The tax treatment is still not clear. If I can recall, the position is that the forgiven portion of the loan is not taxable. However, it's still not clear whether the expenses that you use to support for the loan forgiveness can be claimed as tax deductible expenses. It's still the same status as of today, right, Lynn?
Yes, that's correct. So the question is not whether or not the forgiven loan will be taxable income. The question is whether or not you will still be able to take those deductions to support the forgiveness on your tax return. So that's the outstanding question. That's correct.
Yeah, that's one of the outstanding. Yeah, that's
One of
that's
the
it. Yeah, one of the outstanding question. Thank you, Lynn.
Sure. And let me add for the documentation that it is strongly recommended that you keep the PPP money in a separate bank account. That will help your record keeping to be more straightforward.
Right. So it's easier for you to monitor the cash flow coming in and out of the PPP proceeds. Also included in the documentation is a proof that you use that money to pay for all those qualified expenses. So you have to be able to produce a documentation, maybe copy of your bank statements and checks issued out of the bank accounts where you put the PPP proceeds on, and showing that you spend the money in those allowable expenses. I think this is my last slide, and just to summarize what I have discussed, these are just the few very important items that you have to note. So the revised loan application form is now available in the website. The deadline for application submission for the loan is June 30th, 2020. So you have until the end of this month to apply for the loan. The revised PPP loan forgiveness application is also now available. Just make sure to use the form which you can show in the heading, the June 2016-2020 version. Just make sure that you use the revised form to apply for loan forgiveness. And then the revised PPP loan forgiveness application form is also now available in the website. That ends my presentation. Lynn, do you want to add anything before we accommodate some questions?
No, I'd like to hear some questions if anybody has any questions. Thank you, Cristy.
Thank you, Lynn.
Cristy, thank you so much. Lynn, thank you. Wonderful job. Can we go to the next slide because it has your information? I'm your salesman, remember, Cristy? There you go. Great. So for our audience, there's information for Cristy and Lynn, and we'll leave that screen up. But there's a couple of questions. I'm going to introduce Saida, my assistant, our office administrator. She's going to share some questions that we had prior. And in the interim, for those that are tuning in, you could on the chat box, please let us know what questions you may have so that we can also present those to Cristy and Lynn. Saida?
Hi, good afternoon, everyone. So we have a few questions. One of them is, can they apply for a PPP loan? Can they apply again for a PPP loan?
If they've applied and they withdrew their application before they got a number, then they can apply. But if they already have that number, then they cannot apply again.
Okay, great. Next question is, what are loan provisions?
Well, the question is kind of broad. What are loan provisions? Is that correct, Saida?
Yes.
Well, the loan provision, basically, this is a paycheck protection program issued because of the current situation with the pandemic that we are experiencing right now. The objective of the loan is actually to make sure that you have money to be able to, it's called paycheck, to pay for the salaries of your employees during the covered period. There are, I've mentioned during my presentation, there are specific expenses that you can only claim for in order to avail for loan forgiveness. The payment terms, if you don't qualify for forgiveness, the payment terms, I think it's in my slide as well, has been extended from 2 years to 5 years, and it is subject to 1%. So those are the basic provisions of the loan.
Great.
And
Moving on
that-
to the, sorry, go ahead.
Just to add, Zeta, that should also be worked out with your lender.
Great.
Yeah.
Thank you for
Correct.
answering that. Next question is, I think someone had a question on what expense qualify under transportation for the purpose of forgiveness?
I'll take that one. That's a really good question, and there are still some outstanding questions on that because fuel for a business vehicle is allowed, but there are some other questions regarding transportation. So there will be more guidance released on that.
Okay, so we should be expecting more information on that as they provide us with more. Next question is, can we include payment to employees for mileage reimbursement to employees since it is paid on a separate check from payroll?
I'm sorry, Zaida, what's the question again?
Can we include payment to employees for mileage reimbursement to employees since it's paid on a separate check from payroll?
Well, mileage reimbursement initially is not part of the payroll cost, and therefore it should not be included as under the category payroll cost. I'm not sure, however, if that will be considered transportation. There are still other questions being resolved by the regulation, and therefore there will be Q&As that's still coming up. I'm not sure if that would qualify under transportation. And Lynn, you can provide your comments as well, but it's a reimbursement of mileage.
That's correct. Yes. Right now it's just payroll costs. So that
Yeah.
is why that area has outstanding questions because of that.
Correct. So for now, it's really just payroll cost, meaning cost of salaries and other benefits.
Right.
Thank you, Cristy. Lynn. So I have a question. This is my personal question. So on your slide 20, one of it says on the summary, it talked about the application for forgiveness. And here it says deadline for application submission is June 30th. So I want to be clear on that. So even though it's extended to the 31st in terms of the time that you can spend the money for forgiveness to the December 31st, the application must be sent June 30th. Am I reading this right?
No, Javier, the June 30th deadline is the deadline for the loan application.
Right.
Okay, got it. Okay. Thank you. Go ahead, Lynn.
It is possible in some of the later rewrites 2.0, whatever they call it, that there could be additional application periods, but there's 12 days only left for the funds that are available right now.
Okay, got it. So that's
yeah, and the loan forgiveness application, that is the forgiveness application. So, yeah.
Correct, yes.
okay. And
you have to have a lender to submit the application. Maybe we should mention that now. And some of the banks are no longer accepting applications, but Cristy and I are both CPAs, and our national board, the AICPA, has let us know that we can let you know that the fintech type banks like Biz to Credit, Lendio, Cabbage, those types of things, some of them are still possibly taking application.
Applications.
Yeah, Intuit is for right now for its current QuickBooks customers, not for TurboTax right now, but maybe that will change. So you have to submit your application for PPP through a lender, including these fintech type lenders, which you can find online. We're not endorsing any of them, but those are some examples.
Great. So just one of the, as a clarification, hopefully I don't muddle this, but is there a deadline for the application for forgiveness? In other words, to apply for the forgiveness?
Yeah, that is either by December 31st or the date you submit your application, which could be sooner.
Okay.
There are some questions related to that because of the qualifying period. You have to you want to meet your 60% within the period when you apply for it. So that is an area, that you want to pay careful attention to.
So you want to apply 60 days prior
Not 60 days. You want to have spent at least 60% on payroll and 40% on other qualified costs, right? So you want to hit your numbers so that you have the best chance of having your loan forgiven as much as possible.
Got it. Thank you.
Yes. You're welcome.
Okay, I have one question. Are independent contractors, contracted employees that are in 1099 at the end of the year qualify for loan forgiveness under the employee salary forgiveness guidelines?
Independent contractors would have to apply for the loan and then forgiveness based on a Schedule C, for example. If you're a company or a restaurant or a business that pays independent contractors, the payments to those independent contractors do not count as payroll. But the independent contractor themselves, they can apply themselves for PPP.
Correct.
Does that answer the question?
Yes.
Okay.
Yeah, because the independent contractors are not considered employees of
Right.
those
Yeah.
companies. Yes.
Okay. I don't think we have any more questions, but let's go, you know what, we're going to go one more. Let's go back to this slide to, I don't think we have Cristy's information. Do we have it?
No, she has it.
Yeah, can we share screens one more time so we can get your contact information again for the audience?
Let me,
Yeah,
is it
anyone?
this one?
Yeah,
Yeah.
perfect. There you go. So
Great, thank you.
let me just kind of, if the audience has any questions, I'm sure that Cristy or Lynn would be more than happy to at least to field a couple more, an email. So their information is on there. And I want to just take this opportunity to thank you, Cristy, for a wonderful presentation and just very informative. Took a lot of notes. I'm going to have to get a new notebook. And Lynn, thank you so much for chiming in and just being there for those questions. We appreciate both of you and Vasquez and Company for just being able to help us and help a lot of our clients and some of the guests that were on today to navigate through this time. And perhaps as things change, it's very fluid. We know that we're probably expecting some more changes. We will reconnect and love to have you back.
Great. Well, thank you for having us.
Yes, thank
All
you.
right.
Thank you.
And all right, thank you. And I want to just thank everybody for being on our Zoom meeting today. If you have any questions, you guys have our information. Please reach out to us and we'll let you know on any other upcoming webinars. And we're here to help you during this pandemic. And just remember, one of the things that our dollar bill always says, that God we trust. So through difficult times, that motto should always be in our forefront, that good things will happen in despite of the storms of life. So you guys have a wonderful afternoon. Look forward to talking to some of you shortly. Bye for now.